What's up, guys? Welcome to the weekly technicals video for September 30th, 2018. Before going over the charts, I want to just talk about the news releases for the week. And for this week, Monday through Thursday is looking okay. But for Friday, we do have NFP. So we do want to be careful, and we don't want to be in any trades on Friday. So ideally, any trades that we take this week will be between Monday and Thursday. At the absolute latest, I want to be out of the markets by Thursday New York session. So I will not be trading Friday at all, and we never trade any NFP or FOMC. So just make sure that you're out of all your trades going into Friday, and you're not in the market that day. It's just not a good day to trade. So for Monday, we got GBP news for London session. So I'll be monitoring that tonight. Dollar news for New York session, we've got medium and high impact. Some Australian dollar news right early on, right before London session, really, right at like Frankfurt Open. We've got Australian dollar news tomorrow, 9:30 p.m. Pacific Standard Time. So we can watch out for Australian dollar. I'm actually going to talk about that pair as well in this technicals video, because we could be at a support level now. We've got some medium impact GBP news for London session on Tuesday, and we also have some more dollar index news for New York session. So we've got a speaker, FOMC. So this isn't an FOMC event. This is just an FOMC member who's speaking. It's just like a speaking event. So it's a medium impact news. It's not an FOMC. So we can trade this, we can participate in the market, during this news event. I'm not worried about anything like this. Just the ones that are like FOMC announcements. So again, here we've got more FOMC speakers. Wednesday is actually pretty packed with a lot of stuff. So we've got a lot of dollar index news. So keep an eye on the markets for Wednesday. Probably have a big day there. But ideally, if we can catch anywhere from 50 to 100 pips between Monday and Wednesday, I'd like to sit out Thursday and Friday. But if we have to, obviously I'm willing to trade up to Thursday New York session. But that's the absolute latest. So overall, the news calendar is looking good, other than Friday. So just make sure that you stay out of the markets on Friday. But every other day, everything's looking fine, and any trades I take, I'll send you guys a signal in the Telegram chat. So first things first, let's go ahead and look at the dollar index chart. And we're going to start with the weekly perspective. So I'm going to go over both biases. Okay, I'm going to talk about what I see for potential bullish dollar and what I see for potential bearish dollar. So as you guys know, I'm already more bearish dollar index than I'm bullish, right? So basically, I just think that dollar index will continue to trade lower versus start trading higher, but I'm going to prepare myself for both sides, and that's what we're going to talk about now. So for dollar index on Friday, we did have a little bit of a bullish close, which has caused the weekly close of the candle to be a pretty significant bullish candle. So again, this is a dollar index, the weekly time frame. Now, this high that comes in above this candle, which is 95.74, I'm going to go ahead and map that out now. So this level specifically, this is going to be my invalidation level, or the level where I'm going to switch my idea. And what I mean by that is, if dollar index pushes above the 95.74 level, so it has to push above and close above it on a weekly basis. It can get above it and reject on an hourly or even a 4-hour basis. But if this market so for example, if this week closes bullish above this high, at that point I'm going to have to switch my bias on dollar index to long, meaning I think dollar index will push higher if we get and close above 95.75. Okay, then I'm going to think that we're going to be running for this high here, which is at 97 big figure, and then coming back up to target the 98 big figure, potentially into this weekly bearish order block that comes in around the 98.50 level. Okay, so that's the bullish idea. We have to get above 95.74 first. If we don't get above 95.74 and close above it on a weekly basis, I'm still bearish. So, all right, that's simple. Now, if we look at it on a daily basis, this is the level here. Okay, if we look at it on a daily basis, we've come all the way back up. This purple line is the monthly open for September, and we've actually come all the way back up to the monthly open. So this could act as a resistance level, and we could just see the market trade lower from here. Not only that though, we're within this daily ICT bearish order block. So if this thing is going to push lower, this order block should hold, and we should see the market trade lower right away. So going into the week, for Monday, Tuesday, Wednesday, Thursday, I'm expecting this market to honestly continue pushing lower. So once, the market opens later on today, I'm basically expecting this market, it may hang around this 95.20 level, which is the September monthly open, for a little bit, but mainly the thing I'm going to be expecting is the market to just react here or around this area within this daily ICT bearish order block and start trading lower. So we've gotten above the 95.75 level, 94.75, which was this daily bearish order block 50% level, and the fact that we've done that is showing me potential strength. It doesn't mean I'm bullish yet. It's just showing me potential strength. Okay, so if we get above the 95.74, then I have to switch my idea to bullish. But as of right now, we're still respecting an overall daily bearish market, right? So if you look, we've got the high, low, lower high, lower low, lower high, lower low. We've come all the way back up. We've cleared out the liquidity above here. We've tapped the monthly open again, and we're within this daily ICT bearish order block. So that's pretty much my idea, or my reasoning for believing that this market's going to push lower. So you guys already know the bullish idea is if we get above 95.75. Bearish idea, I want to see this market stay below 95.20. Okay, so we're at, the market closed at 95.13. So going into the week, we should know early on whether or not we're going to be bullish dollar index or bearish dollar index, early on in the week. Like I'm saying, obviously we have our ideas going into the week, but based off what price action gives us could be different. So, we're going to know early on how we should pivot if we do need to pivot, to a bullish idea from the current bearish idea. So I would like to see this market stay below 95.20, and I want to see it just start immediately pushing lower. Okay, and I want to see it run for the liquidity below the 93.80 level here, and we're still looking for a run below the 93.20, potentially down into 93 big figure, potentially. Okay, but in order for that to happen, we have to respect this daily bearish order block, because if we get all the way back above 95.75, at that point, this whole down move, would be blown out. So that would be a break in market structure, okay? And then we would be potentially looking for this. And then if you go back out to the weekly basis, you would see these two down candles. If we get above here, these two weekly candles become a weekly bullish order block. And that's why that's my level. So this big down move, you can see when we just went out to a weekly, it was a bullish order block on a weekly basis. That's why I need the market to get above here for me to confirm that it wants to go higher. But as long as it stays within this little portion of price action that we're within right now, I'm expecting weakness. Even if you draw your fib from the high to the low, come right in and spike the 79% retracement level. So there's multiple things lining up with our bearish idea, right? We don't really have anything other than the fact that we've gotten above a bearish order block for our bullish idea. Now, if we get above 95.75, we would have, more indications that we should be bullish this market, but we don't have that right now. So we have to remain bearish. So overall, still short dollar index for the week, expecting lower prices, which that in itself means higher prices for foreign currency. So now if we go into euro dollar, again, we're going to start with a weekly perspective. As you can see, the price action is pretty much inverse of what we've seen with dollar index, right? So we've got two up candles. Now, if we get below and close below those up candles, these two up candles become what? An ICT bearish order block on a weekly basis. So we're going to do the same thing we just did with dollar index. We're going to mark out the low of this because that's going to be our invalidation level for our bullish idea. So 52.57 is the level. Wait, let me see if that was right. Oh no. Yeah. 5.2.5. 5.2.57. Alright. So if we need to make this blue because if we get below that, it's current support, but if we get below it, it's going to change to a red line, which would be resistance. Alright, so on a weekly basis, again, we're within these two down candles before this up move is technically an ICT bullish order block. With them being so small, I don't like to rely on that as a sole buying idea, but technically these two down candles, because this up candle closed above both of them, that validates these two down candles as an ICT bullish order block. So technically it is an order block. I'm going to show you on a lower time frame why I need a daily level or something that's clearer than just these two small down candles. So now I'll go down to a daily and show you what I mean. So on the daily, you can see that we clearly have these two down candles, which is they're bigger candles, right? And then we had a nice push up away. We traded down into it once, respected it, and then started trading higher again. So it should be a relatively, decent order block, right? And we've got the 50% level marked out, and we've also got the open marked out. Okay, the high was marked out, but I had to, delete that because we have already traded below it. So I got the open now, and I've got the 50% level marked out on these two down candles, which is the ICT daily bullish order block. So you can see that on Friday we spiked through the 50% level, but ultimately we've closed above it. So that's so far a good sign in terms of bullishness. I don't want to see them get back below 1580, which is basically this low is 1570, but 1580 would take us below the 50% level here. And if we do that, I'm more inclined to think that they're going to run the low at 1520, and then they're going to come back down into the 1450s down here. 14 big figure to 1450. Okay, so pretty much my bullish idea for this pair is we need to hold these two down candles as a bullish order block. And just like I'm expecting dollar index to basically start off the week and start trading lower, I want to see this pair start trading higher. Okay, we've already traded into the support, so there should be no reason for them to continue lower other than the fact that they're going to push the market lower. And if that's the case, we get below this level, 1525 to 1520, we can short the retest of that. Okay, so bullish idea, we want to see basically higher highs and higher lows on the 1 hour time frame and low hour time frames confirming this level, and we're going to look for higher prices taking us back above the 1830s, 1820s first, and then really above the 1850 is the ultimate level that we're looking for. Okay, so that is the bullish idea. Now for the bearish idea, if we get and close below the 1580 level, again, we're more than likely going to run this low here. Okay, and if we close below here, That's indicating a potential daily break in market structure. Look for a retest of that level, and you can sell it down here into this ICT bullish order block. Okay, really the 1.14 big figure to 1.1450, and that's how I'd play the bearish idea. So going into the week, I'm already going to be looking for strength in this currency, simply based off the fact that it's within daily support, and looking at dollar index, it's within daily resistance. So these two pairs are inversely correlated, so that meaning we should see dollar index trade lower, we should see euro dollar start trading higher. That's what I'm expecting. But obviously, if that does not happen, this is the idea for the inverse of that. So we continue trading lower, we just wait for a close below here. Okay, even intraday, if you're doing like a scalp or something and we close below the 1580 level on like a 4-hour basis, and there's an ICT bearish order block or something, you can short the retest of that, and then take profit at 1525. But for me specifically, I like to wait for that daily confirmation, so I'm going to wait for a break of structure, which would be below the 1525, and it's got to be a decent bearish candle, kind of like this big bearish candle. I don't want to just see a candle like this where it's just a small bearish candle with a big wick. Okay, that would really indicate a potential low forming to me, and then we would have to anticipate a potential turtle soup. Now, I'm not really expecting this to be the scenario that unfolds, which would be come down, sweep the lows, and then start rejecting and trade higher. We could do it, but I'm not expecting that. I'm thinking if we get below here, we're more than likely going to go back down here. That just seems more probable to me. So nonetheless, you guys know how I'm going to play all scenarios, but I'm favoring the bullish scenario, which is holding support here and looking for higher prices. So you guys in the premium group expect continuous buy signals from me, as long as we're respecting support and within the levels. I'll call those to you guys in the Telegram group. So I'm thinking we should have some decent buy setups for this pair this week. But again, that could very well change if we do get below this level. So the most important thing is to prepare yourself for both sides. Don't get married to one specific side. So I'm not, while I'm going into the week thinking, okay, I'm going to be bullish euro dollar, and I'm more bullish than bearish euro dollar. Now, say, but if the level breaks, I'm not married to the idea. At that point, I'll just say, okay, well then look, I need to switch my idea from bullish to bearish. Real simple. You just can't get married to an idea, otherwise you're really gonna, affect yourself in your trading. So make sure that you're prepared for both, but you obviously have one that you're more, that's more high probability, but you have to have levels that you're waiting for to get traded through, or and that would confirm that you have to switch your idea. So you've already seen that we marked out the invalidation level for USD, so dollar index, and we've also marked out the invalidation level now for euro dollar. So if we get below these levels, if we get below this level specifically, and we get above the level on dollar index, we know that we have to switch our idea. But up until that point, we're remaining bullish foreign currency, bearish dollar index. All right, so for euro dollar, just I expect this 50% level to hold as support if it's good, and we're going to be looking for higher prices. But nonetheless, make sure that you do have the 1525 level on your charts, because obviously that is our key invalidation level that the market is switching sides. So looking at GBP USD now, weekly perspective on this pair here is kind of ugly in my opinion. We came up, we formed this high here, and last week we started rejecting and trading lower after forming the high. So this is definitely looking like a potential high. I don't necessarily trust it though. So there's still liquidity resting above here and here, But with that being said, we're pretty much reacting off of this ICT weekly bearish order block here. So in terms of weakness for this pair here, like I was saying last week, it could be just kind of, stuck in a consolidation. But if we look here on a daily basis, so we've pretty much got this pair mapped out, and I haven't added or changed anything to this pair specifically. All the markups and the levels, all that, they should be the exact same from the ones that we had on our chart last week. Now, if you look at the portions of price action that we've seen, we initially had this down move, then we had a push up, traded back down into the down move, pushed up. We had this down move, market pushed up, traded back into this down move, respected the 50% level, traded higher. So now we've got this down move. I've got the 50% level marked out, which comes in at 1.2940. So I've got that mapped out, and I've also got the high mapped out. So this series of 4 down candles is a daily ICT bullish order block. Just in terms of if we go on a 4-day chart, well, you can't even see it. But basically, this 4 consecutive down candles should act as support, because once we got above it, it was showing strength, right? So now that we're retesting this level, it doesn't have to hold support here. It could very well come down to the 50% level, which is around 29.40 to 29.50. Okay, which is about what is that, 80 or so pips. So we could see weakness on this pair here. Obviously, I'm expecting strength, but with it being in a consolidation, we could see more weakness versus euro dollar, right? The chart's completely different. You look at euro dollar, it's already at the 50% level. It's already hit it, so it should go higher. This pair has a little ways to go before it gets to the 50% level. So, this could be intraday short down to this level, or intraday sell down to this level. And once you get the confirmation here, buy it and then target these equal highs and ultimately the liquidity above here. So for the bearish idea, this market or this pair has to get below and close below this 29.40 level. So so it can't get here and then react bullish, right, the next day. Obviously, if it's going to not hold up, it has to be a significant bearish candle closing through it. So it can't just come, stop right at it, and then go back. It has to break through it and close below it on a daily basis. If it does that, then they're more than likely going to run here, the 28 big figure level, and then target the low back down at 26.50. 26.60 really. But we have to get below 29.50 and close below it with a significant bearish candle. So how you see this candle here, we should see something like that close below here if this pair is going to continue lower. Okay, so if you kind of look at the structure that we've got that's unfolding, we've got a high that formed here. We've already cleared out the liquidity. It hasn't been a significant move up, but we've poked our head above it. And obviously we cleared out some liquidity because you can see the rejection the next day. So big institutions, all that, they took their profits. Obviously you see that here by the move down. So that then becomes, this up move becomes an ICT bearish order block because this down move closed below it. Market trades back up into it, retests the order block, sells off again, forming a lower low. So that's why I'm anticipating, if this market is going to continue lower, it could poke back up into this daily ICT bullish order block. ICT bearish order block, and react there, sell off down to the 50% level. So This one I'm really just watching more or less right now. Unless I get something that sets up clearer, you guys in the premium group will know about it. I'll send it through Telegram. But I'm thinking that before this pair continues higher, it's probably going to come down here. It's probably going to come down to the 29.50 level. It just had such a big, push up so far, and it's cleared out all this liquidity. I kind of think that they're going to want to, if they're going to want to buy it again, they're going to want to buy it lower rather than higher. Put it that way. So, we could see continued strength from where we're at now, though, because we did hit the open. We did form, what looks to be a potential low at the 1.30 big figure level. So we could see strength from here, but ultimately for the bearish idea, we have to get below 29.50. Now for the bullish idea, obviously we can find support here where we're at now and start trading higher, or we can trade a little lower to this level, find support there, push up from there. Now I'm thinking they will more or less come down to this level here before pushing higher. But if they do find support at this level here, we'll be able to see it on the lower time frames. Like 60-minute, for example, right? If we're here, we know that this blue line is the daily bullish order block at the 1.3040 level. And we have to get some sort of bullish price action in here. So far, we don't have anything. It's just a low, and we've got a high. But it's respecting this old high, so it's a lower high. It hasn't made a higher high yet. So we need this market to make a higher high on this lower time frame, which would confirm to us that the daily level is actually holding as support. So we have to see, that could be this high, or ultimately this high here would be the break of structure on the hourly basis, which would confirm the level to me. So we could get above there, come back down, retest, and at this point is where you would be buying. So you wouldn't be buying down here. You have to wait for them to confirm that they're using the level, and you could buy it on the retest of either the order block or structure retest, whatever it is. You could just buy it based off of whatever your entry pattern is there at that level. So those are my bullish ideas for British pound. Let's go into Euro GBP now. So this pair, really nothing has changed. Ultimately, we had a bearish week, but we're still just stuck in this consolidation. So I'm still really expecting GBP USD and Euro USD to both be able to move freely inversely of dollar index. So basically strength in GBP USD and strength in Euro USD, while this pair is still in the consolidation. So I don't really have much to talk about. If this thing is going to trade higher, it should hold this order block that it's already within here, and we should see continued higher prices. But it doesn't really look like it's going to give us that personally, just from the candles and how price action looks to me so far, but we could. So if they're gonna continue higher, I want to see them hold these down, like these down candles here as support, and we should just see higher prices. But what I see pretty much is that they're gonna look to take out the low, which is here at the 88.40 level, and basically just continue lower from there. Now, how low will they go? I'm not really sure. I'm just basically playing this market as a full-on consolidation. I'm not trading it, anything like that. I'm just using it for directional analysis on Euro USD or GBP USD. But overall, I'm thinking both those pairs will be able to move freely because this thing is mainly just stuck in a consolidation. If anything, it looks like it may go lower because of the overall price structure. We've got high, low, lower high, lower low, lower high. Looks like it wants to form a lower low to me, which could indicate some strength in GBP USD and weakness in Eurodollar. But at this point in time, we don't have that. We're just in a consolidation. So nothing really to talk about with this. Euro USD, GBP USD, expecting higher prices on both of those. Personally, obviously we have our invalidation levels marked out, so if that changes, you guys know what levels to be watching out for. Alright, so USD JPY, we have finally got our bullish levels. Now I have not been trading this pair, so I don't want you guys to think like, why haven't you called anything? I haven't been trading this pair. It's just one that I've been monitoring, and we've been talking about for several weeks now that if this market trades higher, we're expecting them to go above 113 to 113 big figure. I mean 113. What am I saying? 112.80 to 113 big figure. 113.20 ish. And pretty much last week we got that. We had higher prices, and honestly, we've just been pushing higher. We haven't really had any significant down moves in USD JPY. It's just been pretty much a consistent run higher on this pair. Every bullish order block you can see, down candle, trades up, back into the order block, respects it, forms a new order block, trades down into it, respects it. New order block just formed here, so in terms of bullishness, we could very well just trade back down into this order block, which, think about this as well. We've broken structure now on a daily basis. So this would be a retest of structure and a daily order block. So you could look for a buy there. And then next level to target would be what? The liquidity above here. Okay, so the high comes in at 113.75, so 113.80. Okay, that's only 10 pips away from where we're at. So ultimately, the main thing you're going to be looking for is these. So about 114 big figure to 114.50. We've got sorry, can you guys still see my screen and everything? Is everything still good? Because something just popped, like my screen keeps saying reload site. So let me know in the chat box if you could still hear and see me and everything's working properly. Just real quick before I continue, just to make sure. Okay, sweet. Thanks, Marcus. Oh, no. All right, are you guys, can you still see and hear my screen? Because my bad, I don't know what's going on. My computer has been freaking out. I've been having technical issues all morning. Literally, my internet started first and my screen monitor wouldn't work, and then now this page is automatically reloading. So everything's still good, right? Okay, all right, sweet, thanks. All right, so going back to USD JPY, we have a ton of liquidity above the 114.50 level, right? So anywhere from 114 big figure to 114.50, we've got this high, so relative equal highs. We did come back and poke above them here, but that's why we can essentially adjust our level to this high, where we've got, massive amounts of liquidity, in my opinion, because we haven't really had a strong bullish close above here. We've just wicked above it and then rejected and sold off. So if they're going to come back above it, I'm expecting, strength. So I'm expecting, big bullish candles getting above these levels if we are going to continue higher. So 114 big figure to 114.50. I'm just going to mark the level as 114.50. That's what I would keep on your charts, because in terms of a target, that's really what I'd be looking for. So still got about like 50, 60, 70, 80 pips or so to go until you actually get to that level. I probably won't be trading this pair. I just mainly like sticking to my personal pairs, honestly. But if you guys trade dollar, yen, all that stuff, I would be looking for that. So, while I am potentially bearish dollar index, just looking at this market, I can't ignore the strength. So it doesn't necessarily look like a turtle soup or anything to me, meaning just a run on liquidity and trade lower, simply because, these candles are strong. These are big bullish candles. So I think, if they're going to continue higher, they're going to use this ICT daily bullish order block, hold it as support, and they're going to push up from there. So that's how I'm playing this. Again, I'm not going to be, trading it. Now, if I do trade it, obviously you guys in my premium group will know about it. If you're watching this on YouTube, obviously you're not going to know about it unless you're watching the charts on your own. But I'm telling you about it here beforehand. So this down candle is a daily ICT bullish order block, which could be support. So yeah, for those of you that do trade this pair, I would watch out for these levels. What I'm going to do now is I'm basically just going to adjust these levels here to this daily bullish order block, because we've already cleared the liquidity, and these two levels are representing the liquidity above the bodies and the liquidity above the high. So since we've already achieved that, I don't really need to continue using those levels, right? I have to update it with my new levels. So the new levels are the open and the high of this daily ICT bullish order block here. Now we're going to change them to blue because they're also going to become support, right? We did have resistance, but now we've got daily support that we're watching out for. So the high on this candle comes in at 113.13. All right. And the open comes in at 112.96. All right, so have those levels on your chart. That's what I'll be looking for in terms of levels for price to trade down into and react with bullishness or find support at. So watch out for that. Especially all you dollar yen traders. And if we get below, so that's the bullish scenario. Now, bearish scenario is, I'm not going to, well, I guess I could. The 50% level of this candle would be basically the last level that this market can trade down into for support. So if we get and close below that level, obviously the support idea is out the window, and we don't think that it's going to find support anymore. We would expect, lower prices and runs on liquidity below the market. So we've got the 50% level marked out, which is 112.83. So if we get below 112.83, well, then we're going to run the liquidity more than likely at 112.60 and potentially come back down into this consolidation we've got down here, clearing out some of the liquidity below these lows. But at current market, this looks pretty bullish to me, being honest. So I think we definitely could see 14.50 by the end of the week on this pair if we do continue higher. So you guys know the bullish idea, and for the bearish idea, obviously we have the 50% level marked out. If we get below that, we've got to switch our idea to bearish. So have those levels on your chart and watch price as we trade around those levels and see how price behaves. All right, so Australian dollar. Daily perspective on this market. Beautiful price action, to be honest. Any of you guys that trade Australian dollar, I mean, this price action has been beautiful. So we've got this high, we've got a low, came back up, made a lower high, then we sold off, validating these two up candles as an ICT bearish order block. We've got the 50% level marked out. Market continues to trade lower, finds a support level, and obviously at this point we start pushing higher. Okay, once we do that, we're now above the resistance level, which was this previous ICT bearish order block. And if you go back through the weekly technicals video, I think it was 2 weeks ago, we actually mentioned that this could potentially become a significant low right here, and any buying opportunity would be based on this resistance level turning into support, which it did exactly that, giving you another buying opportunity here. So market found support, traded up right into the 50% level of this bearish order block. Then what happened? Rejected, came back up one more time, took out the stops, rejected, sold off. Where have we come down into? This daily bullish order block. So I've got the open and I've got the high mapped out. So the high comes in at 72.15 and the open comes in at 71.89. Have both of those levels on your chart, because remember, I'm expecting if Australian dollar is going to, in fact, if this is a significant low, they should find support at this down candle and we should see nice, moves higher, just like we've seen here. We should see the same thing occurring based off this down candle. So, expect potential strength in this pair this week, because we are within, we've got another pair that's within the daily ICT bullish order block. Okay, so for the bullish idea, obviously what I'm expecting is strength from here at current support. So that being the high, we could see it trade higher from there, or it could trade a little lower down into the open. We could see it find support there and then start trading higher. Okay, now we could put the 50% level on here as well. So 71.70. All right, now, wait, did it just? All right, so 71.70, we got the 50% level mapped out. And if we close below that on a daily basis, then I'm wrong about this being a long-term low, and we're respecting bearish market structure at this level of resistance, and we're going to just expect continued weaker prices. Only if we get below and close below with a big bearish candle, so something like this or something like this. We don't want to see like something like this. So I want to see a big bearish candle close below 71.70. If that's the case, look for a run on this low and then look for a run on this low. That's the bearish idea. For the bullish idea, I'm expecting strength at either this level, 71.70, so it could come right to the level, stop there, and then trade higher. Or it could come down to the 71.90 level, stop there, trade higher. Or it could simply just find support with where it's at now and continue trading higher. So I don't know which level it's going to be specifically. I just have to look at the market during session times, and I'm going to be looking for bullish price action. I need to see higher highs and higher lows. As long as I see that forming, I'll buy the market on a down move into a support level, and then I'll be targeting all the daily levels of liquidity that we've been mentioning. So first one would be 73.20. Next one would be the high back here, 73.80. Equal highs here at 74.50. Then we've got a high back here at 74.80. So all those levels we'll be targeting. And if this is a significant low here, okay, so if we buy it for example, if we buy it, right, and we're going to be targeting these levels up here, we have to place our stop loss below this bullish order block here, which is going to be about anywhere from, depending on where you buy it, 70, it could be 70, it could be 100 pips, it could be 50 pips, it could be a pretty nice little stop loss, right? But your targets are going to be significant, right? Target 2 is 150 pips. Target 1 would be 80. Target 1 would be 80 to 90 pips. So already after target 1, you're able to trail your stop loss and lock in profit. So, don't be too concerned about having a big stop loss. If you're lining yourself up with the daily market structure, you'll be fine. And that's pretty much what we're trying to do here. So this will be a pair that I'll more than likely take action on, because I love the price action that we've been getting so far and how it's been respecting the levels even on the lower time frame. It's been a really nice pair to watch, and I haven't participated in it in honestly probably a few months now before I've taken a Australian dollar or even a New Zealand dollar trade personally. So I would definitely watch this level at this daily bullish order block here. I am basically expecting, another higher low point to form. So there's this. So I'm essentially just expecting a higher low point to form in this area. It could be here, down into, at the lowest, the 50% level. Right? So we've got a low, high, higher low, higher high, potential higher low. Okay, it would make sense, right? And then higher high would take us above here, and then above here, and then above here. So this would, in my opinion, be a position trade, honestly, because you can, you would be positioning yourself in line with the potential bullish move up. So to be honest, if this is in fact a daily bullish order block and it's going to hold as support, which all the criteria is there for that to be the case, this and euro dollar are personally my two favorite buys for the week. So, obviously that could change if we do get below our invalidation levels. So our invalidation for this would be 71.70. We have to close below it. Okay, so the bullish idea, we can come down, we can tap 79.70, 71.70, and then start trading higher. But if we get down there and close below it, we have to switch our idea to bearish. All right, because then they're going to be targeting the liquidity below 71.50 and then ultimately below here at 71 big figure, down to 70.80. But if we hold this as support, this is a potential position trade, positioning ourselves for, oh, you know what? Let me use this. All right, so if we, oh shit. All right, so that's the highest target. And here would be our stop. All right, so this would be our risk, because we're risking this. So the red is the risk. You can see risk 75 pips for a potential reward of 335 pips. Wait, that's too high. My bad. For a potential reward of 259 pips. See what I mean? So like position trades, like things like this, they're obviously longer term. So this could take, honestly, with this pair, it does move slow. So this could take like really 2, maybe even 3 weeks to a month for it to actually unfold. But since we're within a daily bullish order block, I'm expecting it to get away from this level quickly and make a higher high. So you should be able to mitigate your risk very soon. Basically, by risking 75 pips, you should be able to trail it below whatever low forms in here. So wherever this higher low point forms, you could have a 10, 20, 5, 7, whatever. You could have a really small stop once this higher low point forms, because you're positioning yourself right at that higher low point, and then you're looking for higher prices. So at that point, you only have, say 5 to 15 pip risk, and you're still targeting 260 pips, right? So you've already mitigated your risk. So don't always, don't think, 70 pips, 100 pips stop loss. Don't worry about that if you're aligning yourself with the daily move, right? This isn't an intraday or a day trade. This would be like a position trade, right? So longer term, swing trade, position trade, like that. All right. So you guys know the bullish and bearish ideas for this now. Let's go over NZD USD. And pretty much the same thing goes for this, right? We're within this daily bullish order block now. So we've got these 3 down candles before this big push up, which broke above the high, indicating a daily break in market structure, right? So we were forming highs, lows, lower highs, lower lows. Then we came all the way back up. We made a higher high, clearing out this liquidity, had a big bullish move above it, and then now we've come back down into the daily bullish order block, which is this series of down candles. So I've got the high mapped out, which comes in at 66.16, and I've also got the open mapped out at 65.91. So those 2 levels should act as support for this market, and we should see it continue trading higher, just as I'm expecting with AUD USD, Euro USD, and really GBP USD as well. So basically, the bullish idea is we hold support with where we're at now. So I hope you guys can see like a recurring theme, how all of these majors that we've went over are all within key daily levels. And this is why I didn't want to trade on Friday, because we have to wait for the market to show us what it's doing at these key levels, right? We can only predict so much, but we can't, assume that, especially with it being Friday, late in the week, like there's so many factors then, that we're pointing to not trading, regardless of the 100 or 150 pips that the market moved, and whatever pair you looked at for Friday. Right? I never worry about missing out on moves like that, because overall, those moves aren't lining up with my long-term bias anyways, right? Because we've seen a sell-off and strength. We've seen strength in dollar index, and we've seen a sell-off in foreign currency on Friday, which doesn't even line up with my, my analysis, right? I'm looking for strength in foreign currency. So if we're getting weakness, I'm expecting that weakness to take me down into a key level or key support where I can buy it at, which does line up with my analysis, which has happened now, right? We're within those key levels. So for this pair, sorry, I just had my arrow. All right, so looking for strength either at this level here or down at this level. Now, again, just like with every other pair, we can map out the 50% of these 3 down candles, which we are using as the bullish order block. So this candle, this candle, this candle, and the 50% level comes in at 65.57. So that is basically our invalidation level. So if we get below 65.57, we have to switch our idea to bearishness. But we have to get below it and close below it, right? With a big bearish candle like this, right? We need to see that, because we could very well come down, just like I said with AUD USD. We could tap the level, we can close right at it, the body can close 1 to 2 pips below it, and then we could just start trading higher right from there. So in order for it to become bearish to me, I have to see a significant bearish candle close through here, and then more than likely what we'll see is the market come back up, retest that level as resistance, which is where I can become a seller at, and then look for lower prices. So just because we break through it, I'm not going to sell it and start chasing price. No, I'm going to wait for price to come back up to the level of resistance that would make the most sense, which would be this daily resistance level, which is current support. That would be turned resistance if we get below it. And at that point, I could become a seller. So I'm never chasing price. I'm only acting, or I'm reacting to the levels that the market prints for me. So that is my bullish and bearish idea for NZD/USD. And the final one, dollar CAD. So we had a beautiful sell-off on Friday for this pair. So definition of a turtle soup, we've been mentioning those a lot lately, is just a run on liquidity above an old high or an old low, and the market rejects. Okay, so just like we've seen here, we had stops, market came above, it spent a few days in here, and then ultimately we rejected. These are the ones that are beautiful. Market has stops above here, daily bearish order block, market trades lower. We were expecting potential resistance at the daily bearish order block. We didn't get that because the market needed to come all the way back up and clear out anybody who was already short. They wanted them to get out of the market. So anyone that sold it here or up here that trailed their stop losses here, they came all the way back up before running the low down here to clear them out, and then in one day they rejected all the way back down basically to 29 big figure from 30.50. So they rejected 150 pips on Friday after taking out the liquidity above here. So this could be your sole entry pattern in itself. Here, as the market trades above an old high or old low, you sell it or buy it. Obviously, it's scary if you don't have a lot of experience or you haven't been trading for too long. But oftentimes you'll see this works very well, especially in consolidations. Look at this market. Consolidation. Stops, runs the stops, trades lower. Runs the stops, trades higher. Runs the stops, trades lower. So obviously, I was not expecting this, so I'm not trying to say oh, I called this or anything like that. I was thinking, the two scenarios I was thinking were we come back up to the bearish order block, and you can hear these exact scenarios if you go back and watch last week's weekly technicals. I marked out this bearish order block, and I said we could trade into this, find resistance there, sell off, and I would become a seller on the retest of the break of structure here and look for lower prices targeting these equal lows. Well, we ultimately traded back up. Again, there must have been a bunch of orders above here. They cleared them out now, and they sold off. So dollar CAD is another one of my favorites for this week. So if you look, we're about to get our break of structure, right? So, Monday, Tuesday, we could be below here, and we're going to look for a retest of structure. Okay, so really the low that comes in at 28.85. So 1.2885 up to, let me delete this. All right, so the level that I would want to see hold would be the low here that comes in at 28. So 28.80 up to $29.75. And so all I'm doing is I'm just mapping out the 50% level. Oh, you know what? I can use this. All right. So I'm just mapping out the 50% level of this down move, which, think about it. What is this 50% of this down move? Well, if we close below here, it's 50% of, right now it's currently a ICT breaker. So down move before this push up. But if we close below here, this up move becomes a valid ICT bearish order block. So this is pretty much the 50% level of this up move as well. See? If I draw my fibs on the bodies, the 50% level pretty much lines up. It's between 29.70 to 29.75. So I'll just go ahead and adjust it to 29.70. It's always better to use the nearest price point than shoot for something higher, especially if it's only 5 pips like that. So 29.70, I'd like to see them. If they do need to come back up that high, 29.70 should hold as resistance. But ultimately, I'm expecting them to just find resistance here at the low, which is, again, 28.85 up to 28.80 or so, I would say. Okay. So I'm going to go ahead and just adjust that here. And the level is 28.85. All right, and so we still have liquidity below here too, so I need to keep that. And all right, so I'm gonna go ahead and delete this now because we already know that that's what we're looking for weakness, right? And I'm gonna delete this. Now, so that's the bearish idea. Now for bullishness, in order for me to be bullish this market, we basically have to get back above this high. So all the way back above Thursday's high at 30.80. If that's the case, then I'm expecting continued strength or a run on the liquidity above here. But up until then, I'm expecting continued weaker prices. So, you know, it's kind of, it could be confusing when you look at like pairs like dollar yen, and then you look at dollar CAD, and then you look at dollar index. You see dollar CAD and dollar index lining up, but then you look at dollar yen and it's pushing up higher. You know, that's like with dollar yen, you really have to focus on like your technicals mainly, and not focus so much on, you know, the correlation between dollar index, because it does like to do its own thing and it's heavily manipulated. It's a heavily manipulated currency, so just keep that in mind. But overall, you know, in terms of my favorite pairs for the week, I would be looking for dollar CAD sells, euro dollar, and Australian dollar buys. And and potential dollar yen buys. So again, not really so much interested in the dollar yen buy, more so focused on dollar CAD sell, euro USD long, and AUD USD long. Those line up a lot better, and there's more high probabilities with those pairs in my opinion. Now USD JPY could very well just continue trading higher for the 114.50 level, and that's fine. You know, that's why I talk about both sides, because I want to be able to have an idea for any scenario that can unfold. That's what helps me, you know, get better as a trader, is by, you know, understanding and creating a story for both sides of the market for each pair, bullish and bearish. Not just marrying one idea saying I'm going to be bullish dollar index and I'm never going to change. You know, so what's going to happen when they trade lower? You'll never see it, because you're always thinking the market's going to trade higher. So you have to be, you know, very versatile in terms of, you know, what, you know, to react. Like, you have to react quickly in terms of what you're looking for and what, you know, like direction the market could go in. So don't get caught up always thinking, you know, that it has to go one way, or it has to be bullish, or it has to be bearish. Focus on what the technicals and price action are telling you, and that will allow you to be able to get in line with what they're actually doing. So that is it for the weekly technicals portion of the video, guys. We can go ahead and move into the questions now. So if you guys have any questions, post those in the chat box, and I will go ahead and answer them for you.